Google just dropped what looks like their strongest earnings report in history. We're talking revenue topping $400 billion, cloud profits literally doubling, and Gemini's user base skyrocketing to 750 million. You'd assume the stock would go parabolic on news like that, right? Instead, it initially popped 4% after hours, then immediately nosedived to close down 2%. Why the sudden reversal? It's all because the CFO casually dropped a bombshell during the call. They're projecting 2026 capital expenditures to land somewhere between $175 billion and $185 billion. That single number sent Wall Street into an instant panic. So today, we need to really break down the logic here. Is Google actually cashing in, or are they just burning money to keep a story alive? And is that insane $180 billion spend a suicide mission? Or is it the ultimate move to wipe out the competition?
First off, let's run the numbers and see if Google is actually making money. The answer is a hard yes, and they are absolutely crushing it. Think back to 2023, when ChatGPT first exploded onto the scene. The whole world was screaming, "Search is dead," and claiming Google was about to get disrupted into oblivion. So what actually happened? Q4 search revenue hit a massive $63.1 billion, up 17% year over year. Where did that growth come from? It's because Google cleverly jammed AI overviews right into the search results. They rolled it out to over 100 countries, serving 2 billion users every single day. And here's the kicker. The data shows that people who use AI overviews actually search more frequently. It's exactly like CEO Sundar Pichai said. Once those user habits are locked in, that reflex to Google it whenever you have a question, that's a brand inertia that ChatGPT just can't steal, no matter how smart it gets. Now, let's talk about that dazzling cloud business. Q4 revenue came in at $17.7 billion, up 48%. But the revenue isn't even the main story here. It's the margins. This time last year, operating margin was sitting at 17.5%. This year, they pushed it straight to 30.1%. That is nearly double. What does that tell us? It proves that enterprise clients aren't just playing around with Google Cloud. They are paying serious cash for it. The CFO even dropped a little detail during the call. By the end of the year, demand actually outstripped their supply. They literally couldn't build it fast enough. Just compare that to OpenAI. Last year, they burned through $8.5 billion, while bringing in only about $3 billion. They are bleeding money. Look at Google Cloud. They're banking $5.3 billion in profit while sitting on a backlog of orders worth hundreds of billions. That is the difference.
So if they're raking in cash like this, why did the stock take a hit? The problem lies entirely in that $180 billion capital expenditure figure, the Capex. The CFO sounded pretty calm on the call, right until he dropped the line, "We expect 2026 spend to be between $175 and $185 billion. I bet you every smile in that conference room just froze. Let's put that in perspective. That is almost half of Google's total revenue. Analysts immediately started punching numbers into their calculators, because when you spend that much on buying servers and building data centers, you get hit with massive depreciation costs. And the CFO admitted it. Depreciation growth is going to accelerate in 2026. It means that even though revenue is going up, the sheer cost of buying all this equipment results in annual depreciation charges that are going to eat a huge chunk of the profits. If net income gets chewed down from over 30 billion to, say, 20 billion, the PE ratio has to be recalculated, and the stock price has to adjust. That is the root of Wall Street's panic. They're terrified that Google is just taking all its earnings and dumping them into a bottomless pit. But there is a massive detail here that a lot of the bears are conveniently ignoring: the backlog. Google Cloud currently has a backlog of orders sitting at $240 billion. That's up 55% quarter over quarter, and it has doubled year over year. Now, this $240 billion isn't just pie in the sky optimism. These are signed contracts, guaranteed revenue that just hasn't been delivered yet. Enterprise clients are signing long-term deals, which means they've done the math. They are convinced AI is going to help them make money. Otherwise, why would they sign their lives away like that? So this current panic from Wall Street looks more like a short-sighted, knee-jerk reaction. Sure, in the short term, depreciation is going to suppress profits. But in the long run, with $240 billion in orders in hand, Google's fundamentals are as solid as a rock. And speaking of rock-solid fundamentals, we have to talk about a reality that a lot of people, especially Tesla shareholders, really don't want to face. Google's self-driving unit, Waymo, is actually working. The data comparison is brutal. In 2025, Waymo completed 20 million fully autonomous trips. Right now, they are running 400,000 paid trips every single week. They've secured actual operating licenses in 6 major cities, including San Francisco, Los Angeles, and Phoenix. They are running these cars without safety drivers and legally charging passengers for rides. This isn't a test anymore. This is already a real cash-generating business.
Now, let's flip the script and look at Tesla. Sure, the FSD updates are rolling out fast, and the tech is undeniably impressive. But right now, the vast majority of their robotaxi fleet is still stuck in internal beta testing, and they haven't even secured the necessary regulatory approvals yet. No matter how much Elon Musk hypes the vision, the cold reality is that Waymo is already pulling in millions of dollars every single week. Meanwhile, revenue from Tesla's robotaxi network is currently sitting at virtually zero. And there is a fascinating little subplot here involving SpaceX. Back in 2008, when SpaceX was practically on its deathbed, Google threw them a lifeline and picked up shares at absolute rock-bottom prices. Tesla, on the other hand, only recently got some indirect exposure to SpaceX through xAI, and they paid a premium to get in at the top. That is the difference between smart early investing and chasing the hype train. Google's strategic vision is just incredibly sharp. Waymo's success proves that Google's AI isn't just vaporware or fancy PowerPoint slides. It's real technology that works, and it's working in the hardest possible environment, autonomous driving. If Tesla can't secure permits for mass operation before 2027, the market share in key cities might already be completely locked down by Waymo. By the time Tesla finally enters the game, they won't be the disruptor anymore. They'll just be another challenger trying to play catch-up. Having discussed the business side, let's circle back to that massive $180 billion figure that totally broke Wall Street's brain. Where exactly is that astronomical amount of money going? The CFO laid it out clearly. 60% is going into servers, mainly NVIDIA's H200s and Google's own custom TPUs. And the other 40% is strictly for data centers and infrastructure. Google is breaking ground in over a dozen countries simultaneously, and they are even looking to acquire energy companies just to solve the power supply bottlenecks. To the people who actually understand this industry, spending this $180 billion isn't madness, it's a clearing event. They are clearing the field. The current AI war is, at its core, a capital war. Giants like Google and Microsoft are essentially using money to build a fortress. If you're inside the walls, life is good. If you're outside, you can't get in. Look at OpenAI right now. They're like a gold miner who struck a vein, but realized they can't afford the shovels to dig it out. They are scrambling for chips and hunting for funding. But their capacity is a drop in the bucket compared to a giant like Google that can casually scoop up hundreds of thousands of chips a year. By dropping this $180 billion, Google is sending a message to the market. If you can't afford the shovels, you can't play the game. Companies like OpenAI that rely on VC funding to stay alive are going to find themselves in an increasingly awkward position against this kind of financial brute force. Technical cleverness looks pretty pale when it's getting crushed by absolute capital dominance. So, as an investor, the landscape is actually becoming very clear. This earnings report was basically a declaration of war. Google is building a moat using 3 massive advantages. First, you have the search business, an absolute money printer that provides the steady cash flow allowing them to spend this aggressively. Second, you have the cloud business, a new growth engine with margins catching up to AWS and a massive backlog of orders. And third, you have Waymo, real-world proof that they can actually monetize their tech. Contrast that with OpenAI. They don't have a cash cow. They have to fight off open-source models eating their lunch, and they have to burn cash just to survive. The risk profile there is going exponential.
For you guys watching, if you're a more conservative investor, Microsoft is probably the safer play. Office is basically a necessity. It's got a massive moat, and the path to monetizing AI there is the shortest and clearest. But if you're looking for real growth upside, Google actually has way more explosive potential. Their cloud margins still have plenty of room to improve. If Waymo can expand to 20 cities, you're talking about revenue in the billions. And if Gemini manages to overtake ChatGPT, the value of that ecosystem is off the charts. Bottom line, that $180 billion Google is dropping isn't a gamble. It is them using their sheer financial muscle to completely rewrite the rules of the game. They are telling everyone that the second half of this AI revolution isn't about who tells the best story. It's about who has the cash to buy the shovels and who can afford to build the data centers. The companies that are still surviving on fundraising and hype really need to wake up. The tide is receding, And over the next few months, we are going to see exactly who has been swimming naked. And for Google, this might just be the moment they leave the competition in the dust and clear the table for good.
Thank you for watching today Money Daily. If this video helpful, even just a little bit, please like, share, and subscribe. On the road to the future, we are strong when we're together. See you in the next episode.